markets are poised for upbeat trade after closing in the green yesterday. The JSE closed slightly firmer on Tuesday, while its global peers were mixed ahead of scheduled remarks from several U.S. Federal Reserve officials. Independent analyst Jimmy Moyaha joins us now for an overview of how the markets are faring in early trade. Jimmy, very good morning to you. Thank you so much for your time. Give us an overview of how the markets are faring this morning.
Morning, Paul. Morning to the viewers. Markets are slightly in the red, with industrials down about 0.75% and financials down about 0.33%, but resources are up about 1%. If you look at some of the early movers on the start of the day, you've got the likes of Implats and Attack are both up around 4%, well, Attack 3.7%, Implats about 4.6%. You've also got guys like Dischem and Anglo Gold and Sibanye also all in the green. You've got the guys like Purple Group down about 4%. Obviously, they put out statements this morning giving a voluntary trading statement giving us a sense of their expected headline loss per share. So that's probably what's driving a bit of sentiment down there. But overall, from our market side of it, it looks as though we may have a good day for industrials, for resources rather, especially if you look at the gold price. That's still motoring on. It's up already about 1.5% for the day. It's almost at $2,050 an ounce, the $2,043 an ounce there. So interesting to see if we'll break that $2,050 level on the gold price. The Brent crude oil price is at $81 a barrel. We know that OPEC meeting that was set to happen on Sunday has been pushed back to Thursday, or tomorrow rather. So we're waiting to see what happens there in terms of output cuts and output announcements, and that could potentially drive some oil price movements before the end of the week. And then if we just have a look at the rand is showing a bit of strength against all the major currencies. It's almost flat against the dollar, but it's at 18.57 against the dollar, and about 23.58 against the pound, and about 20 rand and 40 cents against the euro, improving against both of those major currencies and gaining some ground against the Australian dollar, sitting at about 12 rand 32 against that.
So, Vukile Property Fund published its interim results for the 6 months ending on the 30th of June 2023. How have they fared?
Strong performance from Vukile there. South African business has vacancy, or South African portfolio rather has only 2% of vacancies, and their Spanish portfolio has around 1%. So very, very strong occupancy levels. Very strong occupancy levels that the business has been able to achieve there, and they've cited that a lot of their continued growth has come at a time where markets or the macro environment for them has been rather difficult. They have also said that their dividends per share is up, as well as their funds from operations, which is another key measure that's used by REITs or real estate investment trust companies to measure their performance alongside things like distributable earnings. So funds from operations are up about 5%, as well as dividends per share up about 10% at this stage. They're expecting that their full year dividend would be higher than what was previously forecast. So they've revised that forecast to the upside, which is always a good thing, and I expect that the market will receive that quite well.
And Nasra's interim results for the 6 months, which ended on the 30th of September 2023, are also out. What do those numbers look like?
Those are significantly more improved than what we saw the previous set of numbers looking like. We know that Naspers has gone through quite a bit of changes with CEO changes, as well as their share repurchase program that is still an ongoing program. They gave a bit of guidance around that. That's doing well for them. The OLX Autos business, if you remember, they had that business. They sold that business, declassifying that business unit, and that's also come off their books. So they've given us a bit of a detailed overview of the performance. Revenues are up, earnings per share is up, headline earnings per share, most importantly, is up quite significantly, as well as core headline earnings per share almost more than doubling over the period. So if we look at this half of the year versus the first half of last year, it is significant improvements, and we're hoping that this is a better performance for them when they wrap up the second half of the year and we get full year results from them. The business's net debt position is still sitting at about just under $100 million there, so it's at about $88 million US dollars. But the business, as I said, revenues hits the $3 billion mark. They're up about 9%. So the business is showing improvement, significant improvement at that. They're still holding quite a bit of cash. They've got free cash flow to the tune of around 600 or just under 600 million rand, which is significant considering last year it was this time last year it was a loss. So back in profits there, back with cash reserves. So the business is looking like it's turning around, and they're making some good strategic decisions to get it back on track.
Jimmy, Attack says its collaboration hubs in Waterfall City and Linwood Bridge in Pretoria are seeing increased demand from occupiers looking for secure environments with backup power. Talk us through some of those insights.
Yeah, so that's it doesn't come as much of a surprise. I mean, we know that with the increase in load shedding and the unreliable electricity supply in the country at the moment, that businesses have found new ways to operate, whether it's installing solar systems for themselves or making use of Attack's infrastructure. So a lot of the property companies now are seeing a return to sort of office occupancy where there is generator power, where there is backup power for them to be able to stay connected despite the load shedding situation. Attack has mentioned that a lot of the demand they're seeing at the moment is coming from some of their smaller users for office, but alongside that, some of their blue chip tenants that have been around for quite some time are happier that they're able to leverage off of this infrastructure and the support that Attack has throughout its portfolio. So that's been something that served the business well. Now, I don't know from a demand point of view if that's going to be a sustained solution if businesses then elect to look at alternative solutions. But for the 4 months to October, it looks as though occupancy has reached about 93.6% for Attack. So they did really well in that period, probably as a result of companies needing to rely on their infrastructure.
Very well. Thank you so much for your time. That's where we wrap up the latest in the world of business. Jimmy Moyaha, independent analyst, giving us an overview of some of the expectations and the moves in that space.